Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Seiwan, professor of economics at Ewha Womans University. Dr. Kim, thanks for making time today.
Good afternoon, Devin.
Well, it looks like Chinese President Xi Jinping will be coming to South Korea in the first half of next year, so there's a lot of anticipation that'll help improve relations between the two countries. What would you say about the prospects for their economic ties vis-a-vis the THAAD missile defense situation and other factors?
Yes, President Xi's official visit to Korea is, of course, a good news in improving recent unfriendly relation between the two countries. But even with friendly gesture between the two summits, there are still quite a few restrictions from China to Korea, like banned group tour, banned K-pop in China, and so on. I think Beijing will use these restrictions as a leverage of withdrawing a THAAD system in Korean territory in the future. So it won't be easy to fully recover the relation between the two countries, even with President Xi's visit to Korea next year.
Well, the U.S. and China are going to sign the first phase of their trade deal next month. China lowering tariffs on U.S. goods, so it'll be importing more. Some positive response there from investors. In that context, take us through the global markets.
It looks that global equity market is increasing due to the weakened pressure from U.S.-China trade war. U.S. market actually was pretty mixed in the Christmas Eve market the day before yesterday. Over today, Tokyo market increased by 0.6% or 60 basis point, and Shanghai index also increased by 70 basis point. So in Asian equity markets, we can see that lessened pressure from U.S.-China trade conflict.
Right, and we may have seen an effect similar to that in Korea recently. The Kospi, it's been range-bound, but for a few weeks gradually getting higher. Performance still weaker than some other parts of the world, though. So what's the story in the Korean markets?
Korean equity market for today was pretty lucrative, I have to say. For example, Kospi gained by 2.06%. That was a huge increase. But Kospi gained 36 basis point. And in today's Korean equity market, foreign and individual investors sold equity, but domestic institutional investor was a large buyer for today. But in the long run, I have to say that the reason that foreign investors are not coming back to Korean equity market is related to weak performance of big manufacturers in South Korean economy.
Referring to chip makers, I assume?
Right.
Yes.
Right.
Well, speaking of those, according to the Korean government, exports of semiconductors and cars, which were down this year, will start rising in the first half of the new year. Still, with protectionism rising in the U.S.-China trade war, it's not clear how long that rise might last. Are we set for a recovery in exports in 2020?
Well, that is a really tough question because it is very hard to answer that question with 100% confidence as of now. But according to experts on global chip market and automobile market, there could be possible recoveries in the two markets until the end of first half of next year, as you said. However, it is also true that structural factors like U.S.-China trade war and Brexit of UK and other geopolitical factors like Hong Kong and are still going on. So recoveries of Korean export, particularly in chip export and automobile export, will be clearly seen sometime in the second quarter of next year.
All right, we'll be keeping a close eye on that. Dr. Kim, thanks so much for coming on and sharing your insights. We appreciate it.
Thank you very much.